Because I was cognizant of this new technology, I saw an article that piqued my interest, which is the genesis for why I'm here in this industry and made this industry all I do, all I work on. And the genesis of that was an article that said that this new technology is an immutable ledger. And so that really doesn't mean a lot to most people, but that's the most important thing almost in humanity for record keeping. And as an accountant, I geek out on the getting to the granular level of the accounting financial records that we're provided all the time, especially as my investment banking company. Most everything we see is bullshit. They give us numbers that don't correlate to reality. And so an immutable ledger, it sounded something made up. But I started researching it. And what I realized was that it was immutable. And it was immutable for a variety of reasons that I spent months digesting. And so what I realized was, and I'm going to give you a little bit of my accounting talk, because I do an accounting talk to small groups. I've only done it, 3 or 4 times in small increments to other groups. But what I realized was that the history of accounting, okay, and accounting runs the world. You don't know what you own without a ledger. You don't know where you are. You don't know anything that your government's doing, any business that you're associated, what you have in the bank. You need a ledger to tell you that. So ledgers run the world. And the history of accounting, which are these ledgers, is really, really simple. The history of accounting has 2 innovations before Bitcoin. 10,000 years ago, the first innovation happened. Humans in Mesopotamia or some country, way back across the world, they went to a market and they bought 5 sheep. So they bought 5 sheep at this market. They took a clay tablet. They wrote down, I have 5 sheep. They baked it in the sun so other humans couldn't change the books and records. And that was it. That's the birth of single entry accounting. And over a period of time, you could look at that ledger and you could know how many sheep you have in 6 months, in 12 months, in 18 months. And so you always know how many sheep you have. That was accounting until the 1400s. In the 1400s, they invented double entry accounting. I bought 5 sheep, I paid $5, okay? That transaction, okay, the bought 5 sheep, paid $5 is a debit and a credit. And when you add that up, you get every single financial statement, every balance sheet, every revenue statement you see on the planet Earth today. Every single bank, every government, every corporation, they all use this antiquated system from the 1400s called double entry accounting, which is an analog system. It's terrible. It's terrible because the people that control the books and records, they can change the books and records. They're not immutable. And so what happens when people that control the money can change their own books and records? Well, we see what happens. You have devastating fraud for 700 years in every industry, in every government, and every corporation on the planet Earth. And it's really difficult to unwind or even realize the fraud's going on because the books and records are private. They're privately held. And so in order to figure out that there's a fraud going on these private records, you need other humans to conduct a physical human audit of other human records that are not kept well.
But we know those people are corruptible.
Yes, right. So, right. There, you go down the line, if there's a human element involved, you have a trust factor risk, right? And so, and that's why you've seen large accounting firms implode, right? During the Enron event, the accounting firm that was running Enron approved all of their books and records. And then later on, after billions of dollars went missing, the accounting firm imploded. You saw the same thing with Bernie Madoff. He had financials that were audited every year for decades. You end up with human trust elements in an analog system, right? So you have accounting that was created in the 1400s running the world, running everything. And the question is, if it's such a bad system, how come it was never innovated, right? Why did nobody ever innovate this double entry accounting system? Well, it's really easy. No one's incentivized to fix it because a government gets to control all their books and records. They get the money from the public and they don't have to disclose what they spend any money on because the books and records for your government, well, they're held privately and you don't get to see them. Same thing with corporations, same thing with institutions and individuals. It's all private. And so nobody's been incentivized to change that at all. And so we've seen that last until today, until 2009, really, when the Bitcoin network was created. And what the Bitcoin network did was it took this antiquated double entry system. You have debits and credits. And they came up with this genius methodology, which became the consensus mechanism for approving the transactions between two parties. I'm not going to go too deep into the Byzantine general problem, but I know that you know what that is. And I break it down like this. In the history of humanity, forever, there's no way, assume me and you don't know each other, and we don't trust each other, and we're over geographic space. There's no way for Peter and Darin to conduct a transaction without a third party. And what that means is, if you're in Asia and I'm in Europe, and we make a deal for you to send me some value, okay? You send me the value, but I didn't get it. I don't believe that you sent it, right? I don't know you. You told me you sent it. I didn't get it. I think you're a bad actor. I think you're not telling me the truth, and you didn't send it. And now if I say I didn't receive it and you sent it, you don't believe that I didn't receive it. You think I got it, and now I'm saying I didn't get it, right? So over time and space, over geographic space and over time, two parties cannot conduct a transaction. It's impossible. And so what happened, because we know transactions have been occurring for tens of thousands of years, how did people do transactions? Well, a third-party confirmation system popped up. So me and Peter are doing a transaction. A third-party confirmation system pops up to verify the transaction. You send your value to this third party. I send my value to the third party. They say, yep, we confirm Peter sent his value. Darin sent his value. Transaction culminated, okay? That's how all transactions have to be partaken over the last thousands of years, up until 2009. There was no way to conduct a peer-to-peer transaction over geographic space or over the internet. You still need a third-party verification system to approve the transaction between two parties. Well, thousands of years ago, this third-party confirmation system, what did that turn into? A bank. So the very first business line of banks were confirmation of transactions between two parties, and they took a fee, right? And so now you have this third-party verification system. It conducts the approvals of the transaction and it takes a fee. Well, what's the next thing that a bank does? It custodians money. So if I sent $1 million to the custodian, to this verification system, you don't want them to send that to your house. So you say, you custodian that money. And that's what banks do. They confirm parties between two parties transactions. They verify the transactions, and then they custodianship money. So they custodian your money. Everything else that a bank does in the world today is legislatively fabricated. They just come up with other business lines that they're able to do. And so the banks now have your $1 million. Well, in America, they can borrow from the Fed and then lend that money out to create another product line within in their purview and in their tool shed of products in the bank. And so now this bank's lending out all this money from the deposits. That business of lending money out is now the majority of money that banks made. And it's all predicated on two things. Banks having your money in there to custodian, and the other one is confirming a transaction between two parties. And so we've never had this ability to conduct a peer-to-peer transaction ever because the ledger system didn't work. It was analog, so you had to physically do it, and you didn't trust the parties involved. And so what the Bitcoin network did was you took two parties, party A and party B, conducting a transaction over a geographic time and space digitally, and the consensus mechanism is the innovation of Bitcoin. And this entire innovation talk gets lost sometimes because this is so complicated. You really have to understand accounting and ledgers and the history of transactions between two parties and what's happened globally.
Well, I've had people explain to me that Bitcoin is triple entry record keeping. You mentioned it to me when we hung out a few months back. And I was like, do you know what? I still actually don't know what. Did you know what? Have you heard it, or did you know what it means?
Only because I've got a friend who's an accountant who's explained it to me.
Yeah, but I've never actually had it explained to me in that way. And now I'm like, okay, that's great. I mean, I get it now. And also, what you've done in that, you've identified all the risks around the double entry accounting system with a third party.
Yeah, so right. So because you have this digital node server system that confirms every transaction to its inception, and this is the most important part, it self-audits every transaction to the inception of the Bitcoin. And then after it's self-audited, it writes it to the triple entry, to this third entry. The word blockchain is really a stupid word. It's a silly word. It's technical jargon for an accounting ledger. It's just an accounting ledger. Blockchain is a digital accounting ledger. And digital accounting ledgers have existed forever because if you have a computer and you're keeping records, that's a blockchain. What's the innovation here is not blockchain. It's not it's not an accounting ledger. The innovation here is the methodology to audit the transaction to its inception. The audit factor is what changes this. You now have no human risk between two parties, and you can't rescind the transaction. So you have this immutable transaction that can never be undone, and once it's audited, it gets written to the blockchain, to the Bitcoin blockchain. And so this new technology eliminates, and this is why there's so much upheaval globally, it eliminates all the legacy systems that have been put in place for thousands of years to confirm a two-party transaction, right? For thousands of years, legacy banking systems have all predicated on the fact that we can't do business with each other because there's a trust risk. This network eliminates that. And so on an accounting side, you have the most important accounting innovation in human history, right? It's the first time you've ever had an immutable ledger. It's the first time you have a self-audited system. And so when I looked at this, and I went down the rabbit hole, obviously, very deep in 2011 and then bled into 12 a little bit, I was shocked at the value of this network. And I thought, and I was wrong, I thought and I realized the Bitcoin network, capital B, the Bitcoin network, is the accounting innovation, what I just explained. It's this consensus mechanism, fully audited, every 10-minute transaction written to a blockchain. This party A to party B transaction through this new accounting innovation, that is the Bitcoin network. Bitcoin lowercase b is different. Bitcoin lowercase b is the digital asset that lives on those rails. And Bitcoin, the digital asset, which trades as a commodity, is the best monetary technology on the planet Earth only because it lives on the best accounting technology that's ever been created. And so you can't really understand what Bitcoin is without understanding the rails that it runs on. And the rails that it runs on is the most important accounting innovation that changes humanity, how they conduct business forever. And I thought wrongly that this accounting technology would take off. I said, everybody's going to demand that the companies they invest in and the governments that run their money utilize something to this effect that has to be immutable. I didn't even think it was possible to do that. And so on an accounting level, I was massively intrigued.